All right, so in this video, I'm going to discuss how a candle is formed in the markets, a trading candle, right? Um, let's assume that this is a 5-minute candle. That means this candle will take 5 minutes to form. It'll go up and down for 5 minutes. And then when this candle is done, after 5 minutes, it'll create a new candle, right? So every candle starts off as a little line, a little opening price. That's the price where this candle opens, right? And when it goes up and down, that'll be the current price at the tip of the candle. So, for example, down here is the open, right here, and as it goes up, that's the current price. And let's say it starts to go down, it leaves a wick at the high where it was before. The wicks just tell you where it's been, right? But the current price tells you where it's at in this exact moment. So the open never changes. As you can see, the opening price, no matter what happens, the open always is the open. The current price is always the current price until the candle is done. After the end of the 5 minutes, the candle is done forming, then it'll become the close, right? So let's say sellers kick in, sellers jump in, they're trying to push the price down, and then it hits a support level, and all of a sudden buyers step in. So the low leaves a wick. Remember, the wicks tell you where the price has been, but the current price tells you where the price currently is, right? So it went down, let's say the support level, and buyers came in. Now its current price is going up, current price is going up, current price is going up. And then at the end of the 5 minutes, the candle closes, right? Now we have an open here where the price started out, where it was a little black line. It went, it ended up closing here, but it reached this low and it reached this high. That's the range of the candle. So when you hear people talking about the range of the candle, or even the range of the day, like a daily candle, right? Uh, in a daily candle, it means that it took a full day to create that candle, and we see the range of the entire day. In this example, I'm using a 5-minute candle. It took 5 minutes to create this candle. It reached a low here, and it reached this high. That the wicks tell you again where the price has been. It went down to this low and it went down to this high, but it didn't stay there. So this actually means that buyers came in and passed the opening price and closed above, right? So in a green candle, the open is always the bottom of the body, right? It opened here. Since it's green, that means it went up and it closed here. If it was red, the open means it opened here at the top of the body. It reached up here, but it didn't stay there. It ended up getting pushed down. The price came down to here and closed at the bottom. Since it's red, it means it went down, right? So it opened here, went down, closed here. So this, this I like this visual because it helps you to visualize it. The open always stays the same, and the highs and the lows change depending on how high it reaches in that 5-minute window. And within that 5 minutes, wherever it closes, that's the closing price. I hope this helps to understand candles.